Good evening, everybody. Welcome to my YouTube channel. Welcome once again. It's Sunday evening. We're just getting ready for the market to open in a couple of hours. But that being said, guys, today's video is very specific to a couple of retail concepts that we already know about, which is basically support and resistance. And I just wanted to give you guys a tip on how I look at it. I don't necessarily trade support and resistance in the usual way where you're waiting for a high and then you sell at the resistance and then you wait for the support and you buy at support. But I like to look at it in this way. So let me just give you guys a breakdown of how I've seen and how I learned it to be a bit more effective. So for example, we all know that, price, when we're looking at anatomy of price action, we are looking at, let's say if you're in a bullish run, we're pushing up and then we push down and then we push up again and then we push down and so on and so forth. Okay, so this would be typically, a high, right? And what would say is price is pushing up, getting to a resistance, it rejects, comes back down, forms a support or a floor, pushes up again to another resistance that's higher than the previous one, and so on and so forth. Now, the reverse of obviously is true when you're in a downtrend, you push down, price moves down, then it retests a certain zone or a level, and then it continues on and so on and so forth, right? So we are seeing on the downtrend, price pushed down and got to a level of support and then rejected off of that support into a resistance, and then dropped further and formed a base again lower than the previous base here, and so on and so forth. Now, what you notice is, and especially this is just a recap for beginners, is this level here. Okay, for example, now this, when price was pushing up, this was actually a support zone. Okay, and when it was pushing down, this was actually still a support zone. Yeah. Now, that being said, if I was to extend this line like this, we can actually be able to see that support then becomes resistance in this level here. Okay, because price pushed down and then rejected off of this same support, but which now is a resistance, and continued down. And the same here, price pushed up, there was a resistance somewhere here and then rejected, but this resistance also in the future became a support. So technically, that's what we're saying, that that's what we know, that's the basics of support and resistance, that support can become a resistance can become a support, and vice versa. Now, so when we are looking at trading it, yeah, okay, support and resistance, like I said, we usually buy at resistance, buy at support, sell at resistance, but it's not always that simple. Okay, let me show you scenarios now like that I like to trade, and for today I'll just focus on trading with a trend. I'm a trade trender, so trade trender. I'm a trend trader. That was funny. I'm a trend trader. I trade with a trend. I usually take from my mentors who taught us that the trend is your friend, and actually find myself a lot of the time looking for breakouts, trades, trend trades. I rarely, you'll find me trading it's called what, a consolidation or a ranging market. I like to trade where I can see that we can move in a specific direction for a specific time. So I'll just give you a couple of tips that you can use in your trading with with your support and resistance. So we know that price. This is a key way that I do it. When I'm looking at the trend, we are seeing that price is pushing up and then it pushes down, right? It rejects. Usually that's what happens. Price never just pushes up in one direction consistently. And if it does, possibly there's news, yeah, or something has happened, it will always come back into the trend. Okay, so this is an uptrend. Price pushed up, then pushed down, and then pushed up again. Okay, formed a higher high, and then forms a higher low. Okay, and then at some point you may see it struggling to really push up. So kind of you begin to see that there's a struggle to continue to push up, because it doesn't go as high as these previous highs, right? And then you may even see it pushing down, okay? And then it finally pushes up, okay? Now, usually when this happens, so we see a rally to the top, and then price forms, let's see, price forms a high here, okay? So I'm just gonna mark it out again, assuming that they're first time beginners or newbie traders on my channel right now. And so we are forming higher highs. As you push up, we're forming higher highs. And then we formed a higher high here, okay? And then we kind of came on to that resistance, okay? And when you see something like this, we can see that the buyer strength is reducing because this push up was not as aggressive as this one, okay? And we can see price tapered off here and rejected here at a support or a supply zone. And it pushed lower, right? So when it pushed lower, it formed its initial low here, okay? But when we look at this trend to the upside, there was an initial low here that was formed first, right? So this is the low, okay? And actually this was the initial, the low, and then we formed a higher low here, but then we formed a lower low here, right? So we formed a higher low here, which is higher than the previous low. But then now we began to retrace. Okay, we began to retrace. And then what happened on the retrace? We formed a low, right? Or a lower low. Let me put it as or a low vis-a-vis the high. This could be the initial low vis-a-vis this high. And then now we pushed up. Okay. But if we're just looking at the trend going up, this could also still be a higher low vis-a-vis this low. Now, that being said, so we kind of broke structure here. Okay. Pushed up and then pushed down again and then pushed up. Now, when you see a move like this, guys, most of the time, okay, we find that price is actually headed towards, um, um, there's kind of a zone here. So we assume that there's kind of a zone somewhere here, okay? So what we find is there was also like a zone somewhere here, okay? And then price broke through and that's that. So usually when you see a move like this, okay, you can begin to anticipate that price is going to begin to drop. Okay, that's just one tip, and you can test this out a couple of times. You know, after this massive bullish run, and then we see price beginning to taper off, and then this push up is not as aggressive, and then we see a rejection, a push up. Most of the time, you'll see price beginning to drop again. So what you'd possibly be looking for is now price action. So you're going to combine whatever you're seeing here, the directional bias with some price action, okay? And usually when I talk about price action, I'm looking at potentially, let's see, at candles that have rejection, okay? So what do I mean by rejection? Mhm. So we are looking at so we're kind of seeing so we're seeing some candlestick rejection here. Okay, I hope that's clear. Don't mind my candlesticks and how they look. Mm. Yeah, so what you'd see is maybe price would look like it's pushing up, okay? And then after a while, it starts pushing lower. So you begin to see the rejection up here. So we don't obviously just get into the trade at that particular point in time. You're much better off just waiting, okay? So what you see is possibly another candle formation forming here. So this is a bullish candle. This is a bullish candle. So I'm just going to mark this out. So yes, we are looking bullish, right? Okay, let me change this to blue because I think that's what most of us are used to. So that we can see. We'll change it to bullish blue candle. So we are seeing. So what we might end up seeing is some rejection candles here, and then you'll see another candle formation here. With some more rejection. So this is like we can see that this is like a 1, 2, 3 candle formation. Usually this is a good setup for a continuation now downside, okay? So usually when you see this pattern formation happening, okay, this is usually what happens, and you find that price now totally rejects and begins to drop. Okay, so if you're wondering how do you trade a trending market, these are the things you're looking for. You're looking for a tapering in price to the upside, kind of a rejection, and that an aggressive push up to kind of trick us that price is going up. And usually it pushes up into a zone or another support and another support and resistance level that it probably left a while ago. And then now you look for the price action, the candlesticks formation. So this is like a 1, 2, 3 setup. And then you begin to see now price continue to the downside. Sorry about that. Okay, so you're looking for these rejection kind of setups up here, okay, in terms of the candlestick formation. So I hope this makes sense on an uptrend. Now, if it's the downtrend, the reverse is true. So you see, let's say price pushing down, rallying down, it retests, it continues, and then at some point it kind of like, begins to not really push aggressively, taper out, and then you'd see a push up and then a push down, okay? And this is where now you begin to look for the reversal to the upside, okay? Begin to look at the formations to the upside. So what you find is, yes, price did hit a zone, okay? It hit a resistance or a supply zone or a demand zone, a demand zone here, okay? Like there, and then okay, and then it pushed out and kind of made you think that you're going to start rallying down, but then what you see is price that's pushing up. So how do you now begin to decide that you want to get into the trade? You look for the price action in the candlesticks. Usually, like I said, easiest is really if you see a 1, 2, 3 engulfing formation happening, and so you see something like price action beginning to form, you start seeing rejection on the downside. So you begin to see, sorry about that, guys. So you begin to see, just hold on. Sorry guys for that. Yeah. So you see a formation like this one. So I'll mark this as a bullish candle, or rather a bearish candle. So you'll see like price comes, rejects off a zone, resistance zone, and then now you begin to see a rejection downside, right? Because you're also looking at the price action and the candlesticks. And then you see another candlestick forming. Another candlestick forming. So let me just, so what happens, okay, is you start thinking that price is going down. So let me move this way. You see this break happening, right? Okay. But now, so what initially happened is price was coming from the top and then it started pushing lower, right? Okay, and it went down and then it came back up and closed. Okay, and then the next candlestick that formed was here. It also, those rejection, it began to push up. Okay, it pushed up and then at some point it came back down again. And then some of you are like, okay, this is actually, we are going to start selling, right? Wrong. Because what happens is you begin to see, sorry, see this here. Okay, so these bearish candles can confuse you and make you think that the trend is still going down. But usually after such a setup, you want to start looking at change in trend. Yeah, you want to look at change in trend. So let me just make this. Just make it like this one. Yeah, so this is what you begin to see, right? And then you're thinking, okay, now we are selling, let's sell. But then what then happens? Another candle forms here, and that's what I'm calling the 1, 2, 3 setup. And this candle now is a bullish candle, okay? And yes, it may even have started as a bearish candle in the beginning. Price may have actually been pushing lower, but then what happens is it started pushing up. Now, when you see this, then you know that um, there's a reversal in this downtrend. Okay, so this is how sometimes I do trade a trending market when I'm looking for, okay, this trade has rallied for a bit in whichever direction, up or down, but at some point it has gotten to this support or resistance level, and then now it breaks structure, okay, and then it reverses. And usually when you see this setup here, you begin to see a change in direction. You can begin to anticipate that there's a change in direction happening. The same with this, okay? When you see this forming, okay, in this case, it was lows, highs, lower lows, lower highs, lower lows, but then this lower low was not very significant. And then it bounced off that and then crashed right through. Now, when you see that setup, you can anticipate a bullish move to the upside. And when it's on the going up, you're pushing up, pushing down, pushing up, pushing down, forming higher highs and higher lows. And then we kind of taper out, like I said earlier, and then it's like now we kind of break structure to the downside and kind of confuse people that now we who think that you're actually going down, then you find that you're going up. So yes, the trend is down, okay? The trend is about to change from an uptrend to a downtrend, but you just don't start selling immediately. Okay, you wait for the break of structure again, and then you look for the 1, 2, 3 engulfing pattern, and then you can now begin to sell. Okay, so you can begin to sell on this second bearish candle here. And if it's a case here, price is actually moving down, it tapers out, it will then reject break structure here, and then drop and completely break the strong zone here, but then form this pattern up here. When it does that, you know that the trend is about to change. So guys, I hope that makes sense. Okay, so let's look at an actual chart and try and look at it from a real trending market perspective. CAD JPY has been so let me look at something else, maybe gold, because gold has this way of trending. Okay. So we can see this is the weekly time frame. So we can see here, gold, let's say, pushed up. Okay, let me take this other, use this other. It pushed up, pushed down, rallied down, retested, rallied up, retested. Okay, and then rallied up some more, retested, rallied up. But then what we see at this level, okay, please note that if I look left, this is a key zone. Okay, what are we doing? We are marking out our zones. Okay, that's what basically a lot of retail traders will do. They'll mark out their zones. So I'm just telling you how to not get caught out when you do this whole thing of marking out your zones and trying to trade off of the zones. Okay. So we see, let's say from this, let me yeah, so in this scenario, let me delete that. You marked out your zone from this previous swing high, assuming you couldn't see what's happening here. You marked out your zone, okay? And then what you saw happen is that there was yet another zone up here, a higher high that formed, let's say over here. So we probably have another higher high that formed, and I'm just drawing it based off of what I can see here. So we have these two levels, support and resistance zones, and then we have this zone here, okay, which just taps this high and then the repetition here. Now you can see very clearly on this structure that gold pushed up, then pushed down. Gold pushed up, then pushed down, then pushed up again. Okay, or even you can say pushed up here, pushed down, you know, pushed up again. But you can see before this push up, this break of structure here, okay, we had price rallying, I mean retesting. So it did push up, push down again, push up, push down again, pushed up, and then it pushed down. Now, when you look at this push up here, this high, in as much as it's higher than this previous high, it's not as significant as this one, as this previous high vis-a-vis this one. So we're beginning to see, and then it's approaching a resistance level. So usually most retail traders or most people who trade support and resistance the traditional way will just begin to think of selling at this level. But look at what happened, okay? Price then pushed up, and then it then began to taper down. So the best place to have taken the trade, yes, the price was actually going to go down, okay, and we can see we've been tapering to the downside, but the best place to actually take this trade was here, okay, or after this 1, 2, 3 candle, price pushed up. So the best place for you to have entered a position would be up here, okay, and we can see that happen. If you had gotten into this trade here, you would have been caught out in a really bad scenario, okay? Really, really bad scenario. But now you waited because of this candle formation to the upside, okay? You can see this rally up and then tapering of price here, and then the price pushed up. So you enter on this third candle here. Let's, like, again, we're just using plain candlesticks here, and then price got to that zone, and you can put your stop loss, you know, maybe in the previous high. Remember, this is the weekly chart I'm looking at. So if you're, of course, the pips a bit more. But if I was on a lower time frame, I'm still doing the same thing. The concept of what I'm doing is the same. So this is an example, and if you look at it, this is your risk to reward is 1.7, not bad. Okay. Personally, I would have put this at my previous high there. So this is it. And then you can decide where you want to put your take profit, wherever it is. But you can see this would have been a much better trade than actually taking this trade over here, okay? Because we are seeing this nice pattern here. What am I trying to look for? We are seeing this price action as well, okay? We are seeing this price action here. Okay. This is what we are trading off of this, but we are only trading this after we have seen the tapering of price approaching a supply or a support zone, a break of structure, because there was first a retest, okay, then a break of that structure, and then that's when we're beginning to look for the selling position using the 1 2 3 candlestick pattern. So guys, I hope this is making some sense. Let me try and see if I can find the same thing on a downtrend. Maybe you can find something on a downtrend. So yes, so same thing. Let me just maybe highlight again, just going off of what we trade on a retail perspective. Okay. So what we are seeing is price so this is a zone. This is definitely a zone. This is a zone that I'm sure somebody would mark out. Now we are seeing price begin to push down, right? So this is where price began to push lower. We see price push lower here, and then pushed up again, and then now we begin to see tapering of price here. Okay, so nothing much is happening here. Price isn't really rallying, okay, from that point. So what we're looking for is for potential reversals. We've not yet broken structure completely or retested the zone, and this is where now we're beginning to retest that zone. So what you want to look for at this particular point in time would be an entry to the, so here is my support and resistance. So I have this other support and resistance that I can see clearly over here. And guys, I'm just drawing this. I'm not really being very particular about how I'm drawing the zones. I'm just trying to show you guys how I think, like when you see the equal lows here and you draw your support zone, what you should be trying to interpret in this instance, that price is about to reverse, okay? So there was this consolidation that happened here and a tapering of the strong bearish run here, and then a bit of a break of structure, okay? Okay, and then we see price now broke through and went to another zone. So there's this second zone here that it was retesting, okay? And we're at this zone, this is what you're looking for, okay? You're looking for a potential opportunity to actually buy this market. So you could easily have taken the trade here when you saw the 1 2 3 formation happening here, or you could have taken it here, but this would have been the best place because this is the next zone after the main zone up here. We can see that there is this zone here, okay, that came from a rally from the downside, okay. So now we are here, we've seen price tapering off, and then price comes to this zone. So there are two potential entries. You could have taken this one or this one, but this would have been the best. Why? Because this shows you a clear 1 2 3 pattern here. So let me just highlight it. This one here. Okay, so this one here, 1 2 3, bullish engulfing, and then we pushed up. There was a bit of a retrace here, which is fine. Okay, you'd still be okay in the market, but then when you take the retest trade, this is what you would be gunning for. So let's say I was to enter a long position here on this bullish candle here, put my stop loss just below the zone or just below the previous high there, and then take my profit maybe at the previous high here, or even maybe say I'm waiting for it, let's say, to get to the back to the zone where it came from. Okay, and what we see is price actually went back to the zone. Okay, so your first TP would be around there, and your next zone would be around this zone and that zone. Okay, but if you look at it, you entered really well based off this pattern and then the price action. Okay, so usually what, like, again, the reason why I'm showing you this is because most buyers and sellers will just simply buy at support, sell at resistance. Okay, but in a trending market, okay, you don't want to just enter strictly on that. You also want to look at different pattern formations and then to add some confluence with some price action in the candlestick patterns that form, and then you can enter the market. So guys, I hope this video has been of value. If you need me to just explain this a different way, I can. Please comment in the comment box, or just send me a comment about what else you want me to actually share on. So guys, thank you very much, and do have a lovely evening ahead. Thank you. Bye.